This is Eric Mother with Mother.com. Let's take a look at the breakout for Williams-Sonoma. And we can see here, based on the 3-year monthly chart, so again, 3 years of monthly data, we see that the stock is moving above a prior monthly closing high from 2018, August of 2018 to be specific, and that buy point is at 68.07. So as of right now, this is a breakout as long as it can sustain price levels above 68.07. Now, just for added color, we can see here that the last couple of attempts to break out have failed. There was a failed breakout here. I believe that was in July. A failed breakout on a monthly closing basis in August, and a failed breakout for the month of September. So there's a challenge here. Seems like the stock has been struggling. If it can break out, great. If it can't break out, then of course it might be setting the stage for a major reversal. Now let me show you why I would suspect that this might fail. Just my own personal feeling. Don't shoot the messenger. It's just an educational video. All right. Now, one of the reasons is if you take a look at the long-term monthly chart, based on the uniformity principle. If you are not familiar with this concept, there should be some links in the description of the video that can give you an idea and more examples about this method. But what this method does, it captures the prior areas where there was some type of reaction, and here we see a break. We can call this a significant break because the stock has not been back to these price levels ever since. So a major break here, and that break is consistent with the RSI break that gives us this line. Now, based on the uniformity principle, anytime you are rejected on a prior critical area, that tends to be a reversal. We see the same thing here, a reversal because the RSI was rejected, and we can see here possibility, again it's just a possibility, that over time this might turn into RSI resistance. Something I should also add here is if it shows resistance, when it shows resistance around current levels, we can see signs of an improvement in terms of prices, while the RSI would be struggling. Now, assuming there's resistance here. So I would say this is my biggest concern in terms of the breakout. The key again is to watch that breakout level right now. It needs to hold above 2018's monthly closing high, and that level is at 68.07. So anything above this price is good. And if we fail to hold that price and we drift low, showing another monthly failure to break out successfully, then that becomes a red flag, something to watch out for lower prices. Now, I should also add, if you take a look at the daily, we can see signs of a potential resistance around here on the daily also. We can also see that this is shaping up to be another improvement in daily closing prices with declining RSI strength. Right now, we can see the RSI struggling to hold the 61.8 level on the daily. But more importantly, we have daily RSI uniformity. Again, we can see here that take the line here, and we can see that this is where the stock has been struggling. Every time it comes to this level, there have been price pullback. So again, we can see as of right now, this is where it could struggle. So again, let's watch that monthly breakout level above 68.07. Above it, success. Back below it, breakout failure and chances of crashing lower, or at least moving lower. Eric Mother with Mother.com. As always, good luck, peace, and blessings. ESS.